Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, the Chief Analyst at Wealth Within. This week I'll be discussing technical versus fundamental analysis, and then I'll dive into the Dow Jones and this week's stocks. Before we jump into the report, I'd just like to mention if you have any thoughts on investing, please comment below and be sure to subscribe to our channel to keep up to date. Let's get into this week's report. Technical and fundamental analysis are the two main forms of analysis for the financial markets. But what's the difference between technical and fundamental analysis, and which one should you use? Well, quite simply, technical analysis looks at the data of price, pattern, and time to analyse the movement of a stock or market. The assumption is that what has occurred in the past will likely occur again in the future. So a technical analyst uses the patterns in the market data to identify trends and make predictions about where a stock is likely to go based on how it unfolded in the past. Fundamental analysis, however, is a method of evaluating a company in an attempt to understand its intrinsic value. This is done by examining economic, financial, and other factors that influence the business. In short, it's called value investing, as the analyst is attempting to identify a stock or market that's undervalued in order to enter into the stock or market, and then looking to identify stocks or markets that are overvalued to exit the stock or market. There are often two distinct camps here, and both styles of investors will argue that the one they use is better and dismiss the other as rubbish or of little value. However, this is not the case, as both are valuable and both have their positives and negatives. The style of analysis you choose to use will depend on your own personal preference and how you wish to manage your stock or portfolio. What I mean by this is that in most cases a technical analyst and fundamental analyst have different goals in mind. The technical analyst attempts to identify trends where they can enter and exit over a shorter period of time, such as up to 18 months. Given this, the technical analyst is essentially looking at the strength and weakness of buyers and sellers of the stock or market. On the flip side, a fundamental analyst attempts to take long-term positions in a stock, and as such the analyst is more concerned with the underlying profitability, asset base, and business practices of a stock. So what kind of analyst am I? Well, I'm mainly a technical analyst. However, I do use fundamental analysis in my research. We also teach both methods in our flagship course, the Diploma of Share Trading and Investment, and how to use both methods to your advantage. How do we do this at Wealth Within? Well, when we conduct our analysis, we start by looking at the charts of a company and applying some technical analysis to it. And then we conduct a fundamental analysis review of the company's financial statements. Doing both ensures we get a high probability of being on the right side of the market. Often fundamental analysts spend countless hours attempting to analyse a company's financials, only to not purchase it. Using technical analysis makes the process much quicker, as you can narrow down your selection prior to undertaking further analysis. Fundamental analysts assume that the market is mispricing a stock over the short term, but that the price of the stock will correct itself over the longer run, meaning they are working out if a stock is over or undervalued. So the fundamental analyst is looking at what to buy or sell. The technical analyst is looking at when to buy and sell, and here is the value in why I use both in my trading. Oftentimes, this combination works best when a stock is severely oversold, and entering a position too early could prove to be costly, as investors using only fundamental analysis often buy only to see their position continue to fall. The reverse also occurs where investors are exiting an overvalued stocks that continue to rise after exiting. So combining both methods gives you the best of both worlds. For those of you who are new to the markets and wanting to get into trading and not really sure how to go about it, or you just want to get the basics so you can try trading in a low-risk, safe way, then have a look at our Trading Mentor course, as this is perfect for beginners. As in the course, we support and teach you about both methods of analysis, give you some rules, and show you how you can use both methods of analysis to start profiting from the market quite quickly. So get on our website or give us a call and we can chat to you about what you want to achieve in the stock market and how you might go about getting it. So let's get into the charts. Okay, let's get into the charts right now. And on your screen, we've got a weekly chart of the Dow Jones Industrial Average. And interestingly, it's gone bullish. You know, we're seeing last week opening on slow at 24,519, getting up to a high of 25,043. And that's roughly where it closed. 25,019 is where it closed on the 13th of July. Very, very strong bar here closing right up. It'll be interesting to see whether it can continue on. As I said a couple of weeks ago, I was thinking it was going to drop through this 23,805, but it's showing some resilience. But interesting to see whether it can continue on this week and move up. If we do get a down week or an inside sort of week here and it starts to close below this green line, then we may see it just tipping over. And if it does start to tip over, then we'll start to see it go through this 23,805 mark and go further down. At this point in time, we need to sit back and wait and see, because it is a little bit surprising that it has been or was so bullish last week. From a technical perspective, this could be just a simple counter trend on a further downward move, or it could be, a nice bullish sign for a start of a new upward move. But right now, I'm going to sit on the fence about the direction of the Dow at this point in time, but it remains to be seen where it's going to go. This week I wanted to have a look at the consumer staples type sector here, and having a good look at some of the stocks in this sector. Right now we've got Darling Ingredients on your screen, and looking at this monthly chart, we can see here it's a really nice looking stock in terms of how it trends. It trends really, really well. Nice simple sort of stock to trade. At this point in time, it is moving up quite nicely. It's up at $20 there. We can see here in June it hit $20.36. It is moving through this sort of previous high here where it did find some resistance through here, and it's now moving up. So it wouldn't surprise if we saw another month or 2 months up, a little bit of a retracement to come back to that line before breaking through its all-time high here at $23.95. But right now, good looking stock. If you are in this stock, I would continue to hold it. There'd be a nice little signal here to maybe even get into it if you'd like to know. If you'd like to get into a stock like this in that sort of sector. It does augur well. It's got a really nice trend line up underneath it supporting this run up. If you whack there, it's really, really good close trailing stop loss on here. So it's a pretty low risk trade if you ask me here. The next stock we've got here is Costco. So looking at Costco, really good brand in sort of brand recognition and everything else. And looking at this stock, it just trends. Look at how simply this thing does trend. It had a bit of a sideways period between 2000 and 2004, but since then it's doing really, really well. But looking at this trend, it's starting to accelerate here. So this current big up move, maybe it's one of its last moves up. So if I'm just drawing my little angles here, you can start seeing how the stock keeps changing its angle. And when, as I keep talking about this, when you get 3 or 4 of these, you start looking for the peak to happen. At this point in time, now it's going a bit more vertical, so you can see that vertical nature of this. So these vertical natures or these vertical runs don't last for too long, and currently the low of that is July 2017. So it's been running at this speed for 12 months. At this point in time, if I was in Costco, I'd be staying with this stock right at the moment. I wouldn't be getting out of it. I'd be sitting back enjoying the rise at this point in time. But just look, it's not going to last forever. That's really what I'm trying to say is at this point in time, it's not going to go too much higher, I wouldn't expect, before it starts to do some sort of major retracement here. So the next stock we do have is Altria Group. Let's look at this one. And right now it's looking more bearish here, isn't it? So you can see here how it's high here recently was in June 2017. So it's been going down for just over a year. In this point, we've had a nice move down to a low in July 2007 at $60. It tried to get back through it up to $74 by December, but then again it's fallen away. So looking at your monthly chart here, if I just bring that up and looking at this, it's again another nice trending stock. And just using a basic trend line on a monthly chart would have been easy to trade this stock. This is a really nice big stock, so can't get my pointer to stick here. And you can see just beautiful crossing below the trend line would have been a really, really easy signal to exit this stock and really take some nice profits. At this point in time, I need to assume that this stock is going to continue to be bearish until it really does prove to me that it's not bearish. because when you're seeing this, this could be again just a little bit of a counter trend prior to a further move down. And I'll put some price work on here. If this thing fails to get through this $64 mark here, if it fails to get through this $61 mark here, it's $61.73, and starts to turn and start to fall away, then this low here at 53.91 will fail. It won't hold it. It will just go straight through it. But again, if it doesn't get through this $64 $64 mark or level before it starts to turn away, then I would again suggest that 53.91 would be in trouble of failing. Right now, would I be getting into Altria Group? Absolutely not. Would I be watching back? Absolutely. I'd sit back and watch, because it is a great stock and it will find some support. But when that's the other point, you know, it's going down into, it looks like it's going down into a 4-year low, or at least a 4 and 8 year low. And when it does do that, you're probably looking at a nice deep move down. Let me bring that back up again. Sorry, I clicked on the wrong button. Let me bring that back down, and let's see. Looking at its all-time low there through to here. So you could be looking at around that $40, could pull it right up here. So if it does do falling away, here's your first level of support, $50, and then down to $40 is the next level. They're the next two ones that I would expect it to fall through to. So that's Altria Group. Let's get into the last one for today. Cisco Corp is another one. Again, it's looking one of those ones that's just going a little bit more vertical. See how the angle has changed right there through since July 2017. So it's again another one of those ones that have been running hard, like the ones we looked at here with Costco and what was the name of this one? I can't remember. Darling Ingredients, but Costco was one that was going a bit more vertical. It is looking really, really nice. Again, this one's got a trend line up underneath it, so you've got, if you are in this stock, it's quite nice here. So, and you can see here how it's changed its angle, moving vertically up, and it's even running faster than that. So we've got two pivots here. So to me, again, very much like Costco, this will run out of steam in the not too distant future. I'm not sure how long that would be, because I do need to do some price work, but it doesn't surprise me that there's going to be a lot of stocks that are going to start falling over on the down. That may be why, you know, I'm looking at the Dow saying, well, it's a bit bullish at this point in time, but it's still telling me, until it really proves to me it's strongly bullish, I still think the US market or the Dow is weaker and has a probability of falling away. I'm not ready to call this is a bull run with the Dow at this point in time, even though some of these stocks that we're looking at are doing beautifully. I would stay in this Cisco Corp if I did own it, and I would be holding it until they told me it was to get out of it. And it will break through that trend line at some stage. We may even need to pivot the trend line again, but at this stage I don't think we will. But right now I think it's looking really, really, really good. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.